Welcome back. We take a closer look at the day's market action now with Makwe Masilela from Makwe Fund Managers. Thank you so much for your time, Makwe. It is such a busy week, and with so many market catalysts this week, from monetary policy to geopolitics to earnings, how are you approaching the markets and positioning yourself?
You are right. It's more of a casino. Yesterday we're down 1.5% and dragged by resources, financials. Today is the opposite. The very same resources, financials lifting us. But I think it all started on Sunday, when we thought we were having a nice, quiet Sunday with Trump signing, those trade deals with those four Southeast Asian partners and that framework that the US and Chinese officials searching that out. And we expect that to be signed by the respective presidents come Thursday. But you are right, also the interest rate decision from the US. And I think with that data that was released on Friday, the inflation numbers more or less cemented our expectations that we'll probably get that 25 basis point cut. But the question here is we'll be looking for signals that what's going to be happening in the coming months. But of concern for me, that these markets have been driven mainly by what is happening with AI. Back home here, we've been helped by our resources because we don't have a decent exposure to AI, just like the FTSE. But the fact that you get the executives coming from Oracle and Google, brushing off the possible AI bubble, for me, that itself is a concern, And yes, some of them are coming with the results, this week. Definitely would like to see that if the cloud demand is still there, the return on the investment is still there, and not forgetting that we've got other competitors coming from the other continent, producing these things much cheaper. So we're not saying it's not going to happen, but I think now, given that the valuations are so stretched, I think it's more or less about time that we have to start seeing those returns. Maybe it might not happen now, it might happen next year, but we know that bigger boys like Microsoft at some point, they've been indicating that they're cutting down, when it comes to the expansion of the data centers, but we tended to ignore that. So generally, I think the markets have been driven other than the earnings, because the earnings themselves are not that great, though they're still up, because if you look into the expectation, the average expectation has just been revised down, but we've been driven mainly by what is happening with the trade issues and also the interest rate expectations.
Yeah, lots of things to sift through there, Makwe, as we continue in the weekend monitoring the markets. Let's get into some of the JSE companies that came out with numbers. We Buy Cars, we saw that share nosediving about 14% today, and this is after it posted a year-end trading update. It said that core headline earnings, which the company uses to measure underlying performance, is actually expected to rise by double digits, between 12 and 17%. The company, though, highlighting some once-off costs there that affected other profit metrics due to the listing. What has spooked investors there?
The minute you have to tell us about the profit expectation you are required by the JSE listing, the minute you expect anything of 20 more or less.
Okay.
So these guys, by coming with 17, whether it's double digit, is not impressive. And yes, you are right, that attributing that mainly to the shares that were issued. I think it's 81 million shares that were issued prior to listing, stuff like that. But going forward, the issue here is we've seen that new vehicle sales have been going up, but that has been driven mainly by those cheap imports coming from Asia. But now You Buy Cars is not into new cars, and I don't think they've got sufficient stocks when it comes to those cars that people are demanding when it comes to new cars, because that has to translate into new cars at some point. So the minute maybe they get that right, probably they'll benefit. But hey, moderating inflation, interest rate cuts probably will work towards their favor going forward.
Well, let's talk, as you talk about interest rate cuts, let's go into property, because Baldwin actually released their interim results today, posting double-digit growth from the top to the bottom line, highlighting, of course, that improved macroeconomic environment. The share also extending gains today at the release of the results from when they released the trading update. Has the tide turned for Baldwin?
In a way, it is, and the very same factors that we just mentioned have to increase consumer demand, started to make property investment attractive, especially the residential housing market. And as we have seen, their revenue up almost 44% because of that 51% increase when it comes to apartment sales. Yes, we've seen their gross margin, decreasing from 32% to almost 29%. But we know it's because of the absence of land sales. But their headline earnings per share up almost 29%. And again, not paying us a interim dividend, and that's in they're using the money to try to repay debt, So I think at some point they have to try to balance the two. But so far things are looking okay for them.
Okay, well, let's go into mining and coming from the Anglo-American stable. Of course, now we have Anglo-American and Kumba Iron Ore with Valterra there on the side standing on its own. We did have some mixed production figures coming from Anglo-American, but seeming that there are some green shoots that they're expecting there in iron. And then Kumba Iron Ore, there was a slight softening in production, but we actually saw all those shares climbing, especially Kumba Iron Ore that was up about 5%. Just talk to me about how you view these production updates.
Starting with Valterra, we know that the production when it comes to PJM is not surprising to see that they've been realizing some declines. But I think with the improved price when it comes to a platinum price, and if things tend to work out when it comes to the trade issues, then definitely demand might start picking up, especially coming out of China. But yes, Kumba, we know that they've also benefited from the improvement when it comes to our logistics. And yes, the guys, when it comes to the pricing and the production bodes well for them. Copper continue to be a game changer for the likes of Anglo itself. I mean, we've seen production increasing, and then obviously iron ore because of Kumba. But of interest as well is that
The Minas Rios in Brazil.
Minas Rio, but more of that Canadian company tech that they want to merge with.
Oh,
That
yes.
itself will give them almost a 70% exposure when it comes to copper. And we're all saying that copper is the metal of the future, is more friendly to the environment, stuff like that. So that bodes well for them. But, yesterday we had the likes of Rio warning us that closing one of the smelters in Australia because of electricity supply. My point is, as much as prices are doing okay, the macroeconomic environment improving, we must not forget that we'll still have micro issues like that might affect specific companies.
All right. Well, Makwe, let us get to your stock pick for today. Where are you finding value?
I think I'll buy Clicks. They've managed to open 55 new stores for the year. They've got almost 990 stores. Yes, they're bigger than Discount, but there's always a space for the two to be able to operate. But I like the fact that they increased revenue by 5%, profits and headline earnings per share up 14%, and dividends up 14%. It's not shooting out the lights. It continues to be a steady growth. And if they continue with their strategy of their private label, I think that will work well for them going forward.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today, Makwe. Much appreciated. That was Makwe Masilela from Makwe Fund Managers.